Welcome to the Real Estate Huddle. This is episode 30, and today we're going to talk about what we've seen lately as far as the difference between attached units and detached units and how some people are running from attached units to detached in our market, and we'll talk about why that is, HOAs, insurance, all that stuff. So we'll get this started, and just noticing a couple things from our last monthly market update report. The detached homes are going in 28 days on average on the market. That's how fast they're selling. And then attached units are taking 35 days. So 7-day difference between attached and detached. They're lasting longer on the market. And then over the last 12 months, attached homes have only increased 0.66%, so less than 1% in value. And detached homes have increased 5.86% in value over the same time.
So a big difference there.
Huge. Yeah. We're talking like 10 times almost, more appreciation in detached homes compared to attached units. So we're going to talk a little bit about why that might be. I don't think that that's going to be, a long-term thing, because price point wise, you think about it, you're like, no, incomes are, people can afford these attached units that are average price $474. That's more of the affordability range for what people can afford with their incomes.
Right.
So you would think that those would be growing more than detached homes that average price is $727,000 right now in our market. But the reverse is happening times 10. So we're going to talk a little bit about what we see behind the scenes as realtors, right? And, some of the transactions that we've been through recently this year, I think, kind of illustrate that. But a big deal right now is just the insurance policies in these communities, how that's affecting things, all the storms that we've had.
The hail damage, all the repairs needed in the communities. Tornadoes. That caused, the special assessments, the increase in HOA dues. And I think for me, a lot of the times when I have a buyer in this price point where they're looking for attached units, once they figure out how much money they're putting on a monthly basis towards HOA dues, which in their mind they're not getting back and it is kind of a waste, they tend to get upset about it. I think a lot of the times, a couple of years ago, you could find an HOA due around $200, and now it's really tough to find a nice property in a nice community for less than $375 a month.
Yeah.
With good amenities.
Yep. So why is that? Why have HOA dues gone up so much over the last 5 years, would you say?
I think it's part of property values gone up. Like you said, the hailstorms. There was more roof repairs that I've seen in the last year than in the last 3 years. And I think, the exterior walls of the properties and communities needed a lot of maintenance. Yeah. And I think that just trickles down to special assessments, like I said, and then eventually gets paid by buyers, the owners.
Yeah. Yep. Definitely. Yeah. If you think about it, like some of these roofs on these big, huge condo buildings, right, can be $250,000, $500,000, depending on how many buildings they have and how much is going into it. And so they're huge jobs, right? And the cost of that work that's being done, the HOA is saying that they take ownership of anything on the exterior, including the roof, right? The challenge has been they're short on their insurance, and their insurance policies have been pretty bad because of the cost of insurance that's gone up so much because of these hail-related incidents.
Yeah, that too.
And so, if an HOA has an insurance policy that, let's say it has a 10% deductible on it, right? And the roof job is $500,000, right? $500,000. And so 50 grand of that, right, is now put on that 10%. So $50,000 is now the deductible that they have to pay. So instead of just paying that out of reserves, sometimes they don't have that in reserves. And so because of planning or spending, and so now they have to charge that to each individual owner.
We just saw this
in the community.
Our condo recently.
Yep.
Where their insurance policies were under.
Yeah. So say you have, 25 units in that community. That's $2,000 per owner, right, to cover the cost of the deductible. And somehow it tends to be more than that, right? So it's not just the cost of the deductible. They're charging a little bit more to cover some of their other costs as well. because everything's gone up. Landscaping costs have gone up for them. It's inflation, right? And it's kind of a little bit of hyperinflation that we've experienced over these last 4 years or so, if not more. And so it's been a tough go as far as HOAs go. And because of that, dues are going up. And there was a new law that was just passed, a lovely law that actually protects homeowners, but it makes it difficult sometimes on the lending side. But it basically says that if you're a big HOA community that has multi-buildings and units in it, if you're in charge of the insurance for the roofs or the exterior, and your deductible is greater than 5%, then that community is no longer approved for FHA, conventional, or VA financing. And so that's a big deal. That's a huge thing. And it was just a recent change that they made. And so now a lot of these communities that have had lower cost but higher deductible policies on their insurance, now they have to shift gears and they have to get down to 5% policies, which is going to increase their cost of insurance and probably increase the HOA dues even further, right? Because they tend to push all that back on the consumers.
And
as far as that goes.
what is the goal of that law to just prevent the rising all of the sudden monthly fees for buyers because the insurance is better protecting them now? Yeah,
so good question. I think it's to protect homeowners from special assessments, because there's been a lot of complaints with homeowners that are like
surprise special assessment.
Yeah, especially if it's like $7,500, you know, and you got someone that's like living paycheck to paycheck, and now all of a sudden they have this huge bill from their HOA when they felt like the HOA was responsible for that, but the HOA was underinsured, and so now they're passing it along.
Yeah, they pass it down.
Yep. So
and it gives people a very short period of time to come up.
Oh
with
yeah,
yeah.
And it's tough because if they had no other choice and they needed to sell because they couldn't afford it, it's hard to find someone who's willing to jump into a property like that and say, that sounds like they mismanaged it a little bit, and now I have to assume it.
Yep.
That's what we would get from buyers.
Totally. Yeah. So, I mean, if you live in a condo community or a townhome, you've probably seen signs of this from like in Colorado, especially over the last few years. And so you're probably realizing that, okay, things are changing. There's higher costs. You've seen your HOA dues go up, or you've probably seen a special assessment in your community asking for each owner to pay a certain amount. So our advice to you is have an insurance rider on your policy that says that any special assessment that comes out, you've got coverage for that, because there's an insurance policy rider that you can get on top of your homeowner's policy that will protect you in the event of a special assessment.
For attached units.
Units, yep. So that's essential. I would definitely have that on your policy. It's worth it to eliminate surprises, and that person that's going paycheck to paycheck that doesn't have a lot of funds in reserve isn't on the hook for $7,500 or $5,000 when your HOA comes calling for it. So,
and these are all things that when you're going through the home buying process, you should be speaking with your insurance agent about. Of course, us as realtors can put you in contact with our agents that we know will do a good job and take care of you, but it's definitely questions that you should be asking them.
Yep, absolutely. And there are some corrupt HOAs out there that are just not managing funds properly. There's also some really good ones that are doing everything they can, but the cost of inflation has been too much for them to handle. Yeah, it's been tough, and they have to, because of their books and how money works and their income statements, they have no other choice than to pass that along to the consumer and continue to raise rates because of the cost that's on them. So it's a very real problem for them. And not all HOAs are corrupt. I don't believe that at all, but there definitely are some that are sideways.
I think this is rare, but I've also seen some properties that are attached units, but they carry their own insurance, property insurance, for a roof and the exterior, where the HOA is a little bit more hands off and just covers, if there's a pool or something like that.
Yep.
So there are those options too. I think it's a little tricky with those scenarios though, because I don't know what your experience has been, but if you're responsible for your own insurance for a unit like that, you might see the positive side of, okay, I don't have to worry about, an HOA mismanaging it. But then also if something were to happen to a roof, whose insurance policy covers it, you or your neighbor.
Yeah.
What if it's right in the middle and it becomes a discussion or an issue?
Yep. And usually you'll only see those on townhouses because there's an actual line, a property line on your roof only.
Yep.
Like a condo, there's no line there.
Yeah.
Really.
There's only one. Yep.
Right. So it'd be impossible for everybody to vouch for themselves on that. You'd have a very patchy looking roof, based on certain people replacing and others not.
Right.
So but the townhouses that do those, I think you should look for. I think it's better to have that be in control of that and be able to have the ability to just pay your individual deductible to your insurance company rather than having to worry about the community deductible and your individual deductible.
I think where things were, I think in the past, it was always something a little bit more risky because of some horror stories I've heard where, if we had two properties right next to each other, our insurance companies fighting with each other on who was actually going to pay for it and where it was. And, if it wasn't as distinguished of where the damage was, and then it becomes, a potential lawsuit. But I think those are rare scenarios. But I know they were out there. But now with where things are going with the increasing rates, the special assessments, all of that, I kind of agree with you. It's something to look into, you have a little bit more control of.
Yeah. Definitely.
Well, a whole roof on a building of 5, 10 apartments or condos. Really, I can't really think of any situation where it would be one person's roof and it was their fault. Right?
Yeah.
It would be like storm or something to be like, well, it just affected the top of my roof, but everybody has to pay for it. But it wasn't, unless they burn their condo down.
Could be that. Could be a tree falling on it.
But it's still not really that owner's. I mean, that would suck.
Yeah.
If it was like, I have to pay for it now because it happened to happen on my roof over my unit,
Yeah.
But,
yeah, but I mean, the HOA payments for those units where the roof is responsibility of the owner is like a third typically of what the HOA payment would be for a place that controls the roof and the exterior. So it's kind of nice to have that power in your control, and you can not have to worry so much about that. So if I'm a renter, should I just keep renting until I can afford a single family home with all this news? Or what do you guys think as far as that goes?
I personally don't think you would have to wait. I think if it's something that you could afford, because again, the other challenge that you have is the increase appreciation that we've seen with single family home. And a lot of time people can't save for a down payment as quickly as the market is rising. So you would be, without your own home or without a home for a really long time, probably until you could save. So I think, even though this is a challenge and it's important for you to know that it exists, I think you still, start where you can, whether it's a townhouse or a condo, and work the system. Stay there for a couple years, continue to save on the side, take advantage of the appreciation. Yes, the HOA fees are going to suck, and you might have to deal with an HOA you don't like, but you're not going to be there long term. You'll eventually be able to.
House.
It's not your dream house. It's your starter. You're the stepping stone, and then you eventually sell and move into that home.
Yeah.
I personally still recommend that route.
I do too.
Yeah.
And so if you're a home buyer considering purchasing a condo, how can you mitigate your risk in that? Like how do you?
I mean, you pointed it out earlier.
Rider.
Like talk to your insurance agent about the rider, and make sure you're protected there.
Definitely.
And I think what I've seen a bunch of lenders do is also what happened recently with one of our transactions. They're getting all the information that they need from the HOA to make sure that they're up to date with their reserves and that they're not under already to begin with. So a buyer going into it knows at least by the time you purchased, it was in good standing.
Yeah.
Right.
Can you lean on your realtor for that?
Yeah, you can as well. Yeah.
That's part of our job, right? Like we look into those numbers, the financials, the reserves, that HOAs have to make sure it's not a bleeding cash type HOA that's just struggling.
Yeah, you can lean on your realtor too, and then lenders too. Lenders tend to be a little bit more involved, especially if it's like an FHA or VA loan with those loan types.
Yep.
So with the HOAs, a month, when you're purchasing a home, I think you need to look at that number too, because I recently looked at a condo and I could afford the condo, but the HOAs were $1,200 a month. And I'm like, okay, well, that just priced me out.
Yeah.
Because you don't, when you're looking at purchasing, you're not really thinking, for my house, it's hardly anything for my HOA.
Yeah.
But then going into something like that with a concierge and a valet and all this stuff at these condos, oh my gosh,
Yeah.
it's a lot of money.
Especially downtown, right? You see a lot of that. So you have to weigh that out because $1,200 a month, I mean, that's like $170,000 in purchase price.
Yeah, and I don't think I would use that amount of money in the amenities.
Yep.
Well, I think it's important to know because some HOAs are, let's say, $375, and they just cover snow removal and landscaping.
The
And
basics.
then,
Yeah.
you
At
know,
$375.
and some of them don't have a pool, don't have a clubhouse, don't
Yep.
have a fitness center. So if that is something that's important to you, I think it's definitely something.
Yeah.
Don't just assume, and I think if you come from renting and you have all those amenities, it's easy for one to assume that every condo complex or townhouse complex is going to have a gym and a clubhouse, and, but that's not necessarily the case.
Most likely won't at
Yeah.
$375.
Yep.
Yeah.
Yeah. Yeah.
Yeah.
And I think even when I recently got a condo, there was, issues that you guys were talking about in, a sense where it's like, well, my realtor kind of pointed me in the right direction to not even go look at it because you're going to fall in love with something that you can't get because, conventional loan. If you have a conventional loan, they're not accepting those, or
Yeah. Definitely.
the roof has to be repaired and you can't move in for X amount of time. I mean, that's just not you don't want to pay for something that you can't move into.
And I
right?
always tell my buyers to kind of work backwards. So know where you want to be monthly. And then from
a great
there, depending on your area and where you want to be, you'll be able to put in your average HOA amount and see how many listings are available within that average, and see if you need to budget a little bit more for HOA dues. Because that a lot of people just say, okay, I want to spend. I'm making this up, but $3,000 a month on buying a house, but then they learn, HOA might be $400. So actually, it's $3,400 probably what I need a budget for because of the type of property I'm looking for. I'm not willing to go lower in price because I wanted to be more updated or whatever it is.
Yep.
So I think you really need to think through area, break it down with your lender on how much you actually want to pay plus the average HOA amount in that area.
Yeah.
And lean on your realtor for an estimate too, because sometimes lenders go a little low and it's a little unrealistic. So really ask the question to your realtor to what they're seeing.
Yeah, absolutely. Yeah, and I think it's important that we point out, like, we don't want to exaggerate too far and scare people away from buying these units that are attached because it's a horse race. Sometimes like the detached units will go really strong, right? Like they are right now. And then you'll see like affordability comes into play, and all of a sudden people can't afford those as much because of the growth, and then they get really into the attached units again as investors too. They jump on board and buy more attached units during that time because they know that's where the market is until they catch up, and then detached kind of slows down. So
Agreed.
It is kind of a horse race, and just so you know, over the last 4 years since 2020, so we had attached units average price this year is $474,000. Right, 4 years ago in 2020, that average price was $372,000. Right, so we've grown $100,000, 26% over the last 4 years in attached units. So if you bought your place in 2020, that's worth $100,000 to you today. So the benefits of homeownership on these attached units outweighs the challenges that we're going through right now. Quite a bit. It's just been a rough year for it.
Yeah.
I think that's the main
Yeah. I mean, we're
consensus.
talking $100,000 in that amount of time. For a special assessment, yes, the $7,000 might seem high, but there's a lot more to gain, even with that challenge.
And if you're personally insured with that insurance rider, that's a non-factor.
The $7,000 is a non-factor, exactly.
Yep. Totally. Awesome. This has been a good discussion. Any other final thoughts, you guys, before we close it out?
No.
Okay. Awesome. Well, thanks for joining us. If you're interested in buying a condo or a townhouse, we hope that we are your first call, and we'd love to help you with that and get you into a place that does beat renting. And we can show you the numbers on how that works. And, over the last 4 years, that's pretty telling. I think the next 4 years could be interesting to see how that plays out. But we're expecting gradual growth over that period of time. So again, thanks for listening, and we'll talk to you soon. So if you have enjoyed what you're listening to and you'd like to hear more, make sure to press that subscribe button so that you can not miss out on any more episodes that are coming up. And also check out all of our contact information is below. You can see us at the dreamsmithteam.com to look up more information about our team and our history and all of the members of our team, and see contact information that you can reach us if you have any real estate needs.
See you next time.